Welcome to Crypto World Educate, your go-to destination for the latest updates, news, and insights on the thrilling world of cryptocurrencies. Whether you're a seasoned crypto enthusiast or just starting your journey, this channel is designed to keep you informed, empowered, and ahead of the game. Join us as we dive into the ever-evolving landscape of digital currencies, blockchain technology, and the fascinating stories behind them. A Bitcoin halving, sometimes halvening, is an event where the reward for mining new blocks is halved, meaning miners receive 50% fewer Bitcoins for verifying transactions. Bitcoin halvings are scheduled to occur once every 210,000 blocks, roughly every 4 years, until the maximum supply of 21 million Bitcoins has been generated by the network. Bitcoin halvings are important events for traders because they reduce the number of new Bitcoins being generated by the network. This limits the supply of new coins, so prices could rise if demand remains strong. While this has happened in the months before and after previous halvings, causing Bitcoin's price to appreciate rapidly, the circumstances surrounding each halving are different and demand for Bitcoin can fluctuate wildly. The next Bitcoin halving is expected to occur in April 2024, when the number of blocks hits 740,000. It will see the block reward fall from 6.25 to 3.125 Bitcoins. The exact date of the halving is not yet known as the time taken to generate new blocks varies, with the network averaging one block every 10 minutes. Bitcoin last underwent a halving event on May 11, 2020, where rewards for mining became 50% lower, falling from 12.5 new Bitcoin per block to 6.25 Bitcoin. The tightening supply provided a bullish scenario for the asset where the coin's price surged from $6,877.62 on 11th of April, a month before the halving, to $8,821 at the time of the event itself. Despite significant volatility, the price continued to rise over the course of the next year to reach $49,504 on May 11, 2021. A similar pattern emerged surrounding the previous halvings in 2012 and 2016, where the strongest period of upside came post-halving, and then, despite a significant drop in value around 12 to 17 months later, the price remained much higher than it was prior to the halving. It is not yet clear how the next halving will impact Bitcoin's price. Many commentators believe that the price will follow a similar pattern to the previous 3 halvings, rising after the event itself as the supply of new coins is constrained. However, any price rise will depend on how demand for Bitcoin shapes up over the course of the halving. Demand is by no means certain to increase, or even remain static, as the market has matured significantly since the last halving in 2020, and there are now many more well-established cryptocurrencies competing for users. A Bitcoin halving is built into the network's underlying blockchain software, which dictates the rate at which new Bitcoins are created. The software requires computers in the network to compete to verify transactions, through a process known as mining, and rewards them with a number of new Bitcoins when they can prove that the transactions they have selected are valid. Transactions are verified in groups called blocks, and the network is coded to have the reward received by miners every 210,000 blocks. When the block reward is halved, some users may calculate that their mining activity will no longer be profitable due to costs such as electricity and hardware. Some users may stop mining altogether if the price of Bitcoin doesn't rise to compensate, reducing the amount of processing power in the network. Whatever happens, the speed at which blocks are mined shouldn't be affected, as the software automatically adjusts the difficulty of verifying transactions to maintain a steady rate. When the maximum supply of 21 million Bitcoins has been mined, users will no longer receive new Bitcoins for verifying blocks. However, they will continue to receive transaction fees, contributed by those making payments, as an incentive to verify transactions. It is estimated that the last new Bitcoin will be mined in 2140. At this point, the cryptocurrency will become deflationary, as coins can be lost through user error, for example, by sending coins to an invalid address. Bitcoin halves due to the design of its software, which was created by a mysterious person or group using the assumed pseudonym Satoshi Nakamoto. While Satoshi hasn't explicitly explained the reasons behind halvings, many have speculated that the system was designed to distribute coins more quickly at the beginning to incentivize people to join the network and mine new blocks. Under this theory, block rewards were programmed to have at regular intervals because the value of each coin rewarded was deemed likely to increase as the network expanded. Another theory is that the halvings were put in place to introduce deflationary measures into the coin, so the number of new coins rewarded per block is predetermined. Unlike the fiat monetary system, where overprinting by central banks can result in sustained reduction in the value of the currency, the fixed total supply of Bitcoin available and the predetermined rate of printing new Bitcoins hedges against this risk. One criticism of Bitcoin's design, including halvings and the finite supply of 21 million coins, is that it encourages users to save rather than spend in the hopes that coins will increase in value over time. This may have fueled boom and bust cycles in the past, with users hoarding coins only to cash out at key levels. And that's a wrap on today's crypto news and updates. We hope you enjoyed this deep dive into the ever-changing world of cryptocurrencies. Kindly subscribe, like and leave comment. Stay tuned for more exciting content coming your way as we continue to explore the latest trends, developments, and stories that shape the future of finance.